Hi everyone, welcome back to Be Rich. I hope you're having a wonderful Sunday. And what I want to talk about today is what should your outlook be for the year ahead, and what are the top 6 things you should keep your eye on as you're investing and you're allocating your cash and your investments this year. And towards the end of the video, I'll talk about the 10 companies, if you're in the US, which you can look at investing in this coming year. Depending on your risk appetite, you can look at these companies and maybe they'll offer good returns this coming year. This is what I feel. And this is also what I've been reading online. Some of these companies are what I've been reading about also online, and you can touch upon them. The first thing you should look at is rebalancing your portfolio, because last year was a very good year in terms of returns in Nifty and in Sensex if you're in India. And it's maybe time to look at the evaluations of some of the things you're holding and see if there's any prospect of further growth. If there isn't, maybe you can look at cashing out and moving some of these into bonds, especially in India. If you're there, increasing your bond allocation would be prudent, because our current Indian market is overvalued, is what Anand and me feel. And this is what we are doing personally. We are moving more of our investments towards bonds in India, and from the interest from these bonds, we're looking at further stock pickings, because the simple reason is if we do have a correction, we'll be able to re-enter our positions in these companies again at a lower cost. This is removing the froth from the top of the market, as they say. So we can look at some bond allocations, and a lot of them are offering very competitive and high yields even compared to banks now, because of the rise in interest rates from RBI and the Fed and everywhere. Banks are offering competitive interest rates, but I would rather stay within bonds for the short term or even long term. Some treasury bills are also offering good returns for the short term. So if you have some liquid cash sitting, which you need probably in a couple of months, 3 months, 4 months time, you can even look at some treasury bills here in the US. And I would say keep your cash holdings in a moderate amount. Keeping some reserve cash is good in case you have some expenses coming up. Not all your money should be invested, because you may not be able to pull it out ideally when you need it. So do hold on to some cash. Don't think we're out of the woods in inflation. Inflation is still there. So don't keep your eye off inflation. Until this year is over, at least inflation is still going to be something talked about and looked at. Interest rates will be moving up north, is what most people feel, or maybe staying there, because most central banks don't seem to be having any appetite to cut interest rate, is what Anand feels. And I also agree with him on this. I don't see any indication for any reason for any central banks to start moving interest rates downwards unless there's a recession. And that is something very hard to see. All recessions, we have always understood, looking back in hindsight, yes, we can see when the recession was. But except for the pandemic recession, most other recessions have come out of the blue and hit us quite hard. So it is something to keep an eye on this coming year, inflation, to see where it goes. A lot of people in India have taken exposure in small caps. And we feel in India, small caps are overvalued, and some of them have corrected, but I don't know if it's corrected enough, and you should be very careful in small caps. In the US, on the other hand, small caps, there are some great small caps you can look at, and they're very reasonably and well priced, so maybe you can look at entering those small caps. Now, as far as the list is concerned, these are the companies we've been looking at. Well, in banking, we have JP Morgan and we have Bank of America. Then we have Unilever and Kraft Heinz in FMGC sector. And then in cars and automobiles, we have Toyota and Honda is what we're looking at. So these are the 5 main companies we are looking at, me and Anand. Aside from this, there is talk about in online, if you go, like people like Motley Fool, who are recommending their stocks picks for the year, are like CrowdStrike, PayPal, Airbnb, Spotify, Walt Disney, Berkshire Hathaway, Amazon, and Alphabet. So do look at these companies, do your research, see if the price to earnings is making sense to you, see the dividend yield if it's making sense to you. Some companies like some banks like Bank of America, which we were talking about, did go through a correction and has seen some recovery. You have to see personally, do you think holding it right now at this price, does it make sense to you? And do you see any room for any further growth this coming year? And another thing which I wanted to remember is taking a contrarian approach is beneficial if you're a value investor and for the long term. What is a contrarian approach? Contrarian approach is looking at stocks and companies and shares which are not loved by mainstream market, or Mr. Market, as they say, by investing in companies which are unloved or companies which are sold heavily and not looked at. But if you find them as companies you would like to hold on in the long term, and if it's a cyclical nature in business, the nature of the business is cyclical, then it's something worthwhile looking at. If you go online and you research this and seeing about loved versus unloved stocks, you will see that over a period of a long time, especially like a period of 10 years, 15 years, unloved stocks outperform loved stocks and the index quite well if you move into these companies at the right price at the right time. So that is the critical thing. So do try and have that philosophy in your mind when you are investing this year. Try to take a contrarian approach. See what companies people are trying to get out of and why are they getting out of it. Is it because of a nature of the business is such that it's cyclical and maybe it will improve over a period of time, that it will rebound in maybe a year or two, and maybe you can take these positions in these companies at a lower price. This was true especially in the case of Bank of America last year when the regional banks, everyone had a run at those banks. All banking shares were corrected in the market and Bank of America price dove all the way down to $24 or $25 if I remember right. And from there it's recovered nicely. So if you do see these opportunities, especially this coming year, if you see stocks in your list and there's a sudden sale or a selling pressure on them in the market, and you believe that you have done the right research and you know why they're selling and it seems logical for you to move in, you can look into getting into these companies. So remember and keep that in mind about loved and unloved stocks and why you should move into unloved as much as you can if they are there on your list. So I hope you found this video useful and entertaining as always, and I'll see you in the next one soon. Bye.
Copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.